Hey guys, happy Tube Tuesday. Speed Mood Pies brought to you by netstories.com asking, do I have to pay taxes on my YouTube earnings? Now, the short answer is yes. Technically, you do. And there are many other qualifications for you not to have to pay taxes, and we'll get to that in a second. But before I even start down that long path, and this won't be a long video, but it is a path that is a long path, know that I am not your tax advisor. I am not a tax consultant. I am only someone giving you general advice. And if you have a large sums of YouTube money or money made anywhere else, please go about seeing a tax professional to get advice and guidance. If not, there's plenty of online tax programs where you can enter everything and it'll figure everything out for you. And it's beautiful. And it's even free in most cases. So yes, and this is specifically talking about the United States. I realize I have quite a few subscribers outside of the United States. I can't know every tax code out there. So I'm not going to say you're on your own, but you're on your own this week. So yes, you do have to pay taxes. And technically, YouTube, through Google, through Alphabet, again, we're talking about a parent of a parent of a parent. Alphabet, which is YouTube's parent company, will send out a 1099. It's actually XXII Holdings or whatever. It's the parent legal lease. Don't worry about that. They will send you a 1099 if you've earned at least $600 through YouTube in a calendar year. So keep in mind that for most of you, for most of us, that doesn't apply. But also remember, YouTube earnings are calculated as part of Google AdSense earnings. So if you happen to have a popular blog or any website or anything like that, and you're also generating AdSense revenue, you will quite possibly be over $600 for 2017. So, and even if you're not, technically you do owe that taxes because you did make that money. But this is just the amount that Uncle Sam knows. Because if Google sends you a 1099 that you've made at least $600, and if you didn't receive the 1099 and you made over $600, there's a good chance yours just got lost in the mail. You can actually go through the Google AdSense. There's a little link there where you can actually send in for a tax form help, and they'll send you the actual 1099. Either way, if you made more than $600, that will be filed with the government. You will actually have to be accountable for that. They know you made it. Now, you're saying, well, I got a 1099. I made $800. Good for you, by the way, on YouTube. And I'm not going to file. They're not going to figure it out. Now, there's a chance that the IRS says, oh, well, we have so many bigger fish to fry. We're not going to go after this. But there's also a good chance to say, hey, things are pretty slow. And this is flagged here. This person did not file that income, and we have it right here. And they may go after you. So it's good to be smart, especially if even if you're just getting started and you're just making maybe $5, $10, $20. And now, of course, with YouTube clamping down on their monetization, there's a lot less people making any kind of serious money, at least, small fry money. It's only the big wigs and everybody else. But there's a good chance that if you have a YouTube channel and you got demonetized back in February, then maybe you've come up with new ways to monetize your channel through like an Amazon affiliates program or maybe a Patreon or any other connection. Maybe you started your own blog to promote your videos and you're putting ads on there. So there's a lot of ways that you could be making money. Keep in mind that if you are generally making more than $600 through Google and all its companies, Alphabet, whatever it is, they will find you and they will tell you, hey, this is how much you made, and that will be filed. The good news to that bad news that you do have to file it. One more bad news is that it's not just a matter of saying, oh, I made this amount, I'll just slap it in there. No, it's actually a Schedule C, so you're considered a contractor. So you're not an employee of Google, you are a contractor, which means not only are you liable for doing a self-employment, a Schedule C, which is sort of like, self-employment or your own business return. So that's part of it, the Schedule C. But you are also liable to just pay your version of taxes, as well as a portion of self-employment tax, which includes Social Security and Medicaid, your contribution, which is if you work for a company, some of that would be taken out of your paycheck. Your employer would pay another chunk of that. In this case, as you're self-employed, you pay all that. So that's like a 15% hit or something like that. It varies. It's something like that. I may be off on the amount. But either way, it's not just your tax rate and that's what you're going to be out. You're actually going to be on the hook for quite a bit above that. So that's the bad news, that you will owe money. And it's probably good news if you made enough money that you're worried about that. But the good news is that as a self-employed contractor, you also are able to write off legitimate expenses. Now, what are legitimate expenses? And of course, If you're filing a Schedule C, you'll put in the money that Google said you made, and maybe money you made from any of the other outlets. Whatever. If you're collecting donations through PayPal, if you're selling stuff through Shopify, whatever you're doing, all the money you're making, put that into your income. It could be offset by expenses, and these are legitimate expenses. And we're talking about stuff that generally go for your video. So let's say you bought a green screen. And obviously, there's no other reason for you to buy a green screen except you wanted to make videos, and ideally for YouTube. Boom. That is an expense you could write off. Some stuff, like let's say the money you pay for your internet connection. No, you can't, because you're sharing it. You're not using it exclusively for that. Your home office, that's a deduction that a lot of self-employed people do. If there's a portion of your house that's used exclusively for that business, and I mean exclusively for that business, you can deduct a portion of the expenses related to that part. And there's a standard deduction that's up to $1,500 for 300 square feet of space, if that's what you do. It's prorated all the way down, or you can itemize it. Now, again, these are things that give up red flags for the IRS if you have too many of these expenses. So keep in mind that if you did go this route, you should probably have very good records of everything you do. Now, there are some things, also some expenses that you may not even realize that you can be able to deduct off your income. So let's say you're going to film a video, and let's say you're going to, let's say, a park or a beach that's maybe 3 miles away from your house, and you're going to go drive over there. Now, self-employment for a Schedule C, there's a way to write off your car cost as far as general cost. But even if you don't do that, which is, you're risking getting more audited. The more chances you take, the worse chances are you're going to be audited by the IRS. Driving is, I think it's 53.5 cents per mile driven. So if you're not going to itemize your car, for let's say you drove 3 miles there and 3 miles back, and it was exclusively to film that video, not just because I'm going to have a fun day at the park or I'm going to have a fun day here, but I'm going to go film this video, I'm going to go to the airport and pick something up, and that's what I'm going to do. You are able to write off the miles, which is, again, in 2017, for the 2017 tax rate, it's already 2018, is 53.5 cents. And it was actually 54 cents in 2016. That actually went down half a penny. So sometimes, gasoline prices are down, car maintenance costs are holding up, if not lower, so they adjust it that way. So there's a lot of ways that you can actually reduce the amount of money that you actually owe. But of course, again, if you're going to take chances, by all means, please do not ever submit this video as evidence that, MoonPie said I could do that, because I'm not saying you can do that. I'm saying if it's legitimate and you have proof. It's not like, well, yeah, I went to Starbucks, 5 days a week to dream up video ideas, so I'm going to, knock off all these caramel macchiatos out. No, you can't do that. You can't do that. But on the other hand, if you film a series of My Day at Starbucks, and that's your vlog series where you're filming something there and you're doing reviews of products, yeah, you can write off these products because you actually turned it into part of your business. It was a legitimate business cost, I think. Again, this is not bona fide advice. I'm just trying to answer the original question, which was, is your YouTube income taxable? And the answer is hell yeah. Whether you have to file that depends on a lot of things. There are some factors. If a certain bar, maybe you didn't have enough income. Where you are, if you're dependent of someone else, for some of you younger YouTubers or some people that are still living at home, many factors play in there. But in general, yes, it's income that's reported, but it also opens up, and it's a lot more expensive than just money you made at work, because there's a lot of taxes that your paycheck gets taken out of that you're going to have to pay yourself, a self-employed contractor, for YouTube or anything else or any of the other services that you're doing. But again, be careful about exploring ways that you can reduce it through expenses, but they are perfectly legitimate. Just about everybody does it. So, if it's a viable thing, by all means do it. But if you are making money or just starting to make money, these are things you have to think about. And maybe you do need a tax attorney, not a tax attorney, like a tax advisor, a tax consulting firm, many different things that, even if you just go to the local H&R Block, or Jackson Hewitt, whatever. If you don't know anybody that does it personally, you can go that way. But again, the online programs will walk you through a lot of the steps. So that's it. That is a very long answer. I thought this was going to be a short Tuesday. It winds up being long, but it is April, and tax day is officially, they always say April 15th, but when April 15th falls on the holidays, it does this Sunday. It's actually April 17th is the tax filing deadline. If for some reason you don't have your stuff in gear, you can file an extension. But again, if you owe money, and you probably do if you have self-employment income, because you probably didn't plan on this and increase the amount that your regular paycheck for your non-self-employment is taken out to a company for this, you will probably owe taxes. If you report an extension, there's a penalty on the money that you will have to pay. They do not penalty is a bad penalty, but is an interest. So it's better to get this filed as early as you can. But yes, record everything, all the money you make. And even if it's not reported to you, if it's a small amount you made, you may want to consider reporting it just to get into the practice of it. And again, always look at the deductions. And again, if you're spending something that's specifically for your YouTube creation or any kind of video creation or anything related to the businesses that you find yourself doing, save your receipts, record your costs and expenses. You'll be grateful as the year plays out once we get to April and it's time to file taxes. So that is this Tube Tuesday. I'm such a downer talking money and taxes, but next week maybe we'll cover something fun. I will see you next week. Tube Tuesday, brought to you by netstories.com. Get a tax specialist, not me, to help you out if you still have questions. Bye.